Hi, it's Stephanie Evelo here with the Evelo team at Keller Realty, and I'm so excited today. Even though it's a rainy day outside in Indianapolis, it is looking bright on the real estate market end. So, want to have our monthly real estate update here with Bob Werner, one of our senior realtor partners with the Evelo team. And today we're going to review what happened in the local market in January in the last 30 days. So, Bob, take it away. What
Perfect.
happened in the local housing market here in January?
We'll just get straight at it. So you've been with us every month for I think this almost marks our third year in a row of these monthly updates. So a few things we're looking at here. First up today is where that median sales price is for our market. So January ended at 268, which was down a little bit over December, where we were at 275, but that still is up 10.7% year over year. So we're expecting that to slow from what the growth has been the last couple of years, but we do still expect to see growth this year. Next up, we start to see some of those bigger changes. So this is that cumulative days on market. So you'll see a couple big numbers here. At this time last year, our days on market was 6. Right now we're at 38. So that's a 530% increase year over year. That's a big number, big change. And
Wow, we've actually
up.
passed, we've passed the monthly mark, right?
Yep.
Like
Yep.
that's big. I mean, it's
That's the
still
first.
only 1 month worth of inventory, still super low, but
Yeah,
yeah.
that's just that days on market, and that's up 46% over last year. And then that next one, when we do get to that month supply of inventory, we've actually crossed the 2 month barrier. So this is another big number here. So that's up just a tick under 180% year over year when we had a 0.8 month supply. And that's up 46% over last month. So again, another big change there. So days on market, obviously that means as that increases, the absorption rate decreases a bit. So those two kind of go hand in hand. And then the last one in kind of this first look at the market is that average percent of list price received. So that continues to dwindle down some, still hovering in the high 90s, but that ended the month at 96.9%, which was down about 2.5% from last year and down about 0.7% from last month.
Wow. So what are the specific metrics that you've been following to track the shifting market?
Yeah, so we've a few months back, we started tracking a few different things so we could kind of see those coming changes and try to predict them a little bit. One is that active inventory. So back in the day, there was different thresholds, right? But we ever have under 5,000 active listings. Way back, rarely did we have under 10,000 active listings, and for the last few years, we've lowered below 2,000 a couple times. So we're increasing, but we're still kind of going up and down. So we ended January with 3,897. So we're actually down a little bit from when we almost got to 5,000 at the end of last year. But that is up almost 100% year over year and down just a little bit over last month. So we're seeing that increase. So again, a little bit more supply of inventory coming on the market, obviously location dependent and price point dependent. Next up is that closed sales. So the longer something sits on the market, the longer it takes to have a greater number of closed sales. So for the month of January, we're 1687. That was down almost 29% from last year, and then down almost 36% from last month. So again, seeing that kind of come down a little bit. So we're starting to see the basics of some, I don't want to say balanced market because we're still far away from a balanced market, but definitely moving in that direction. The last one up is the number of new listings. So that was up a little bit last month, 2264, which was up 22% month over month. But that was down almost 20% year over year. So that's some of the ones we've taken a look at just to kind of track how things are changing on that front.
Yeah, and what that's showing and telling me is that finally buyers may be able to get out there, find a home that they're looking for, and have a choice, right?
Yeah,
Like,
absolutely.
in the past, I mean, there just weren't even homes to choose from. And now it looks like, they're starting to, they may actually have a choice, which is awesome, right? As a buyer. So
Yes.
yeah, given opportunities out there. Well, of course, the number one question that everybody asks is what are going on with the interest rates? So any thoughts on that?
Yeah, so we just take a quick look at that every month. Obviously, there's lots of variables here. We just pull what the US weekly average rates are from Freddie Mac. So last week we ended at 6.32%. That's up about 0.2% from where we were last month, but down from when things peaked at over 7% last year. So we're still kind of continuing this downward trend. When it crossed 7, we started going down and down. You can see there are a couple blips here. We had gone down for 4 or 5 weeks in a row through most of December and January, and then we've kind of slightly upticked again. So I anticipate, just based on the information that I see and read, that we'll kind of continue that up-down pattern probably through most of this year, depending on what happens with the economy overall in the US. But hopefully we're done seeing the 7s, and then we'll see where we might land in the 6s, or even if we get back down to the 5s at some point this year.
Yeah, and that's what a lot of data is suggesting, that it's going to continue to trickle down a little bit. So yeah, in a good positive way for buyers. So any final thoughts on just the market in general?
Yeah, we always try to end with something. You kind of hit on it. Obviously the tide is changing a little bit for buyers. Or again, at just over a 2-month supply of inventory, we're still in what would officially be considered a seller's market, a balanced market being about a 4 to 6 month supply of inventory. But there are some more options. Again, it's price point dependent. Still great competition in some price points in some locations, but definitely some more choices this year if you've sat on the sidelines for a couple of years. Just some general overall thoughts on how to win as a buyer in today's market. Obviously, building out your team, really making those strategic plays and plans, really considering where you want to be geographically, right? You might have to be open to maybe being a little bit further on the outskirts than you want it to be to provide more options or more affordable options. And then just making sure we get you pre-approved, and then working together to really make sure you stand out from the crowd when it comes time to making an offer. So that's just some of our tips this year, as if 2023 is buying is on your list of goals. Those are some of the things that we can do to help you put a strategy in place to be successful.
Yeah, and I think it is important that people know that it's still expected for them to get pre-approved, not even just pre-qualified, but actually pre-approved. So,
Yes,
it's no too soon to start that process. And obviously we have contacts and our preferred lender, Phil Logie, to help with that. So yeah, awesome. Well, thank you so much for joining us. We appreciate, thank you, Bob, for sharing each and every month, all the data here. We appreciate that, and being able to share with our clients and our friends and family and those who are considering making a move here in 2023. Thanks so much. And if you have a real estate need that we can assist with, let us connect. And you can contact us at info@eveloteam.com or 317-863-9011. And we'll have all of that here on our post as well. Thanks so much for joining. And as always, make each moment count. Bye-bye.